get right now to Keith McCullough. He is with Hedgeye Risk. He's on the phone with us right now to give us his take on how this is going to affect investor sentiment. And you got to imagine, Keith, looking at these pictures, they're very dramatic on the streets of Athens. Does this change the game on risk in Europe?
Well, Betty, I think that it was proactively predictable, so I guess that would be the first thing. Markets in Greece and Spain in particular, these markets have crashed. If you look at Spain, understanding that a crash is north of a 20% down move, Spain is actually down 21% since January the 5th. You have Greece down 22-point-something% since the beginning of the year. Greece is actually down 40% since October. So if you do believe that Mr. Market has been signaling that these things have been on the come, then it's maybe just delivering on what people actually had in terms of their greatest fears.
But Keith, how much does this raise the doubt, though, that Greece, in fact, can stick to these austerity measures that they just agreed to over the weekend?
Well, I think that the message is clear, and what's interesting about this strike is that, one, it's just getting started. Two, you have the UK election coming tomorrow on top of that, and then three, you have the Germans voting on this Greece bailout on Friday. So you're going to have, like, boom, 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 three very explicit catalysts from a European perspective that's going to vote on the reality or the propensity of getting this austerity package done. Now, if you just look at CDS in Greece, it's raging to the upside. CDS, I think, is trading at 855 right now. I mean, this thing is gone. And for anybody who thinks that Greece, isn't making up the numbers or people actually believe in this package, the market has voted on this already.
Okay, then what happens, and what happens to the euro?
I think right now, when you get an event like this where the whole free world is going to be watching it YouTubed on TV, the euro is going to get oversold from an immediate term perspective. The risk management range that we've put up this morning is $1.29 to $1.32. So I'd be really surprised if we don't see a rally in the euro with everybody pressing their shorts down here in the face of what you see on TV, at least levitating to $1.32. But then we're going to start to go down again because the issues in Spain are going to be even worse than what you see in Greece.
Okay, so all that you described, Keith, which is certainly going to be of concern to any investor, not just over in Europe and overseas, but here in the U.S., what does that mean? More ugly days here in the markets, then? Are we going to see more three-digit falls in the Dow?
Yeah, I think that, a very important, three-factor model that's at work here in the U.S., price, volatility, and volume, has really flashed very negative in the last 2 weeks here in the U.S. So prices have broken down. We had an 1192 level of support on the S&P, so that's broken. Volume and volatilities are raging to the upside in the face of prices breaking down. So you've seen a couple days in the VIX in particular yesterday where the VIX was up 18%. That's real, and that's fear.
All right. Okay, Keith. Well